What's up? This is Damon from StockBarometer.com. What we're going to do today is look at the top 5 stocks for the upcoming week, the week of February 16, 2015. Now, you are going to need 3 very free websites to do these analyses. I will do technical analyses for swing trading, in other words, short-term trading. I'm going to give you my top 5 stock picks for the next week. These are stocks that, based on the technical analysis, look like they will go up. I'm not going to do any fundamental analysis, though I will tell you what these stocks are linked to. Okay? So what you're going to need are 3 websites. Finance.yahoo.com. You just go to this interactive chart area. First thing you're going to want to do, first thing that comes up is Yahoo, because they're selfish like that. What you're going to want to do is you're going to click on 1 month. Then you're going to click on this and choose candle. We want to look at the candlesticks. Now we're not going to deal with Yahoo, that's not a stock pick, okay? But I'm going to show you the first one, and here we go. The first stock pick for the week of February 16, 2015 is Twitter. Why Twitter? Let's take a look at the candlesticks. Alright, what do we got? We have a big gap right here. This gap is tied to a very high volume, which you can see down here by this large green bar. A gap with a high volume tends to continue in the direction away from the gap, so this gap will widen. Now what we do after we see a gap like this is we watch the candlesticks for a candlestick pattern that implies the gap will indeed widen. Up until yesterday, Friday, we did not see such a candlestick pattern. However, on Friday we do. What we see here is a tiny red candlestick. It's not even red. You can just say it's a candlestick that is a doji star. It's basically black because it's so thin. When you have a doji star, what it represents is indecision. Investors don't know whether to buy or to sell. What you do when you see that, generally, not always, but generally, you want to wait until the next day to see the resultant candlestick. What we see is a thicker green candlestick that engulfs the previous doji star. This pattern that we see here indicates a bullish trend. The stock will most likely go upward. Now, this gap plus this candlestick pattern alone give you a pretty high probability that Twitter will continue to increase upward the next week. But we also want to check some other details of the stock to make sure that we are making a decent decision, a risk-averse decision, unless you're risk-seeking. If you're risk-seeking like I am, you might just want to base your decisions on these candlestick patterns. I do that quite often, but a lot of my newsletter subscribers probably wouldn't be happy if I were giving them all these risky decisions. So let's go ahead to StockTA.com. And at the upper left here, we're going to type in Twitter's stock ticker, TWTR. Hit go. This site is nice because it gives you a more or less general, I guess you could say it's a cumulative trend for both the short term and the intermediate term, which are both important for, okay, short term is good for swing traders, intermediate term is good for position traders, and long term is good for investors. I'm a swing trader and I usually give swing trading advice, but I also do a lot of position trading, so these are 2 important indicators here. But you don't ever really want to rely on these 2 from StockTA.com. You usually want to go down and look at 2 of the main things that they offer, which are, first, the support and resistance levels. Nothing interesting here. If you see anything that's below 10, it's usually not that important. And then down here, we're going to just be looking at the short-term chart indicators. We don't really care about anything except for the Fibonacci's and the stochastics. The Fibonacci's tell us whether the stock is likely to come back if it falls. If we see a very bullish or a bullish, if you see a green word, in other words, that means that should Twitter begin to fall next week, it's very likely it'll come back up anyway, so it's a safe bet. Secondly, the stochastics can tell us one of 2 things. Generally, it tells us whether a stock is oversold or overbought, but it also can tell us whether the stochastic indicator itself is meaningless. I'm not going to get into that today. I'm just going to tell you that if it's green, that means you're pretty much good to go. It's more indication that the stock will continue to rise. So our indicators from this site also support buying Twitter. Why did I go to candlestick chart here? Oh, there's no reason. There's actually no reason because we can do that here in Yahoo Finance. So let's close this. I actually use that other chart for myself because I have a big screen TV. But if you guys are watching this on a phone or something smaller like a tablet, then Yahoo Finance is just much easier to look at because it displays the candlesticks in a larger pattern. All right, so we're going to look at the candlesticks plus some indicators that tell us whether the decision is risky or not. So I am going to recommend Twitter for the week of February 16. It's a good stock. Everybody knows what Twitter is. I don't really have to explain it. Next is Microsoft, which everybody knows as well, so I don't have to explain that. Isn't that great? Now, Microsoft is an interesting one because, again, we have a huge gap here. This time the gap is down. The stock fell quite precipitously. And what we have is a high volume associated with that gap, indicating that the stock price will continue to go down for that next week or 2 weeks, which it did. Bump, 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 bump down here. Now it's starting to go back up, but none of these candlesticks really give a good indication that it will continue to go back up until what we saw last week, which was 2 hammer candlestick patterns in a row. These 2 green hammer candlestick patterns, they look like hammers because the body of the candlestick is pretty much only at the top, and we see a little bit of a shadow down below, if you can tell. So these hammers together indicate that the trend is upward. Now, why are we going to do this now after a down gap? Simply because the down gap tells us how far the trend will likely continue. When you have a down gap that's starting to fill, and it does fill, you can more or less predict the price point at which you should get out. So here we are at 43.87 as of Friday. Now, if it closes, which I predict it will, we will end up at $47. So that's $3 per share of profit within a week, which is pretty good. If you've got the money to buy Microsoft, buy it. Let's take a look at the other factors that might influence our decision on Microsoft. Microsoft is, again, bearish in the long term. Who cares? We don't care about these indicators. We care more about the resistances. And we do see a resistance at 10, and it's at 47.55. Now, what did I just say? I said we should get out at 40, right? Well, then this resistance doesn't really matter. If we're getting out at we're getting out at 47. If this resistance is above our price point, we don't care about it. So even though Microsoft is very unlikely to go beyond the price of 47.55, we will still make a bullish bet. We will still bet that the stock will go up and that this gap will fill. Let's take a look at the stochastics. Nothing interesting. Fibonacci's are bearish, so if we see the stock starting to drop, we don't really have any indication that it will reverse and come back upward. So let's make this a short-term bet, maybe a week-long bet. See if it fills. If you see the stock starting to drop, you should probably get out. But overall, this looks like a pretty good bet. That is Microsoft. We're going to move on to the next one, which is FCX. You've probably not heard of this company before. I have not heard of the company before. They are a natural resource company. I think they are looking for copper. They're basically a copper mining company. Again, unless you're a long-term investor, we don't really care what the company does. We care more about the candlesticks plus the indicators we saw at stockta.com. Now, this is an interesting one because we do see another gap right here. This time the gap's volume is more or less in the regular trading volume range. So theoretically, we should wait for a signal that tells us the stock will fall and then short the stock. However, we don't see such a signal. None of these, besides this candlestick pattern, which doesn't confirm itself on February 9th, we don't see any indication that the stock will fall. However, we do see 2 new gaps. A gap right here from February 11 to February 12, and then another gap from February 12 to February 13. Now, when you see two up gaps in a row, you can usually expect a third up gap or at least a bullish trend. We want to ride that for a bit until the third up gap. If you see 3 up gaps in a row, you want to get out. But we see 2 here, which means it's probably going to continue upward. So this would be also a very safe bet. Not only because we've already seen that this gap might not fill, probably won't fill, but also because we haven't seen that third gap yet. Ride this trend up until you see the third gap. Let's take a look at the other indicators to make sure we're not placing a very risky bet. We see resistances at many levels. Now, where are we? We got to ask that question first. We're at 20.29. We are right above a support level, which is great, which means that if the stock falls, it's very unlikely to fall below 19.66. So we're essentially buying at a low. Now, this is great because that last candlestick we saw on Friday actually broke the resistance. Remember, if a support is below a stock that just moved up, then that support originally was a resistance and we have upward momentum. So if we see another resistance, it's also likely that it'll break that resistance, though we wouldn't want to actually place a bet on that. Now we see the next resistance at around $24, which is off the chart actually. So that's not something we need to worry about. This is a very safe bet just based on that support level we have right below it. In addition, well, these are bad signs. The stochastic says it's overbought, but it doesn't matter. If it's overbought, it might dip a bit, but it's unlikely to dip below that resistance. The Fibonacci say that if it starts to fall, it might not go back upward. But again, if it starts to fall, what's more likely to happen is that it's going to hang out at that resistance level of 19.66, and you wouldn't really lose much anyway. So this is like almost like a risk-free bet. Of course, there is risk involved, but it's a risk-free bet, and it looks like we have some upward momentum. So I would say this is a good pick for February 16 that week. Next one is a company you also have heard of and probably heard lots of bad news about. This is Halliburton. They're an oil company. They like to go into, the Middle East and take oil from the Middle Easterners, whatever. We're not going to talk about morals here. We're just going to talk about stock chart indicators. Now, again, we see this two gaps up. But I would say this isn't really much of a gap because this candlestick we see on Thursday has a tall upper shadow, which more or less overlaps the candlestick on Friday. So I wouldn't really consider it a gap. But notice that we have a hammer candlestick again on Friday, which usually indicates an upward trend. I would say the fact that it looks kind of like a 2 gap up pattern is good, but that's not enough to make a bet on. What we're really looking at isn't the Friday candlestick, but the candlesticks from Tuesday, Wednesday, and Thursday, which is a pattern that was confirmed on Friday. Now, what is this pattern? This is called an evening star pattern. Hey, is this an evening star or morning star? I forget the name. Okay, don't worry about the name. The pattern looks like this. We've got a big red candlestick followed by a low green or red candlestick. Usually, sometimes it's even a doji star, which is more or less a black candlestick, which means that the opening price and the closing price were the same. But what we have is we have red, and then a low candlestick, and then a green candlestick above that low candlestick. When you see this 3 candlestick pattern, when you see this 3 candlestick pattern, you can usually bet that the next candlestick is going to be high, that the next day is going to close at a higher price. If you see that, then this candlestick pattern has been confirmed and a upward trend is more or less confirmed. These 4 candlesticks together tell us that Halliburton's probably going to rise next week and it's going to be a good bet. The only worrying thing here, and it's not really that worrying, the only worrying thing here is we see a gap here with average volume, which usually closes, and technically it did close on this day because of this candlestick's downward shadow, which more or less overlaps this candlestick. So we don't really need to worry that much about this gap filling. Instead, we're going to make the conclusion that Halliburton's going to be going upward based on our candlestick analysis. Now let's check the other indicators. We have a very strong support at 42, which is down here. So if our decision is incorrect and Halliburton does drop, we will be out $2 per share. However, the Fibonacci's are very bullish, which means that if it does drop, it will actually come back up in most cases and almost immediately. The stochastics are very bearish, which means that the stock might be overbought and have a tendency to drop. I'm going to say go with the assumption that Halliburton's going to rise next week, but if you're more of a risk-averse trader, you might want to watch to make sure it doesn't drop. If it starts to drop, wait till it drops to a low. You'll know if it's a low based on a candlestick that has a, let me find one, like this. If you see a candlestick with a very, very low shadow, then the low is at the bottom of the body of the candlestick. So here the low would be 39. That's where you'd want to get in. Now, our low, just if we don't have a candlestick like that, our minimum is probably 42. You might be lucky and be able to get in at 42, but I'd say don't count on that. If Halliburton really is rising, you want to get in earlier rather than later. So that is my suggestion on Halliburton. Try to buy on Monday. You might want to watch a bit, but try to get in on Monday. The fifth and final stock is AA. They are a aluminum company. And this is a gap that is also an area gap, which means it will most likely fill. We, of course, don't want to just bet that it'll fill based on volume and based on trading region. We want to bet that it'll fill based on post-gap candlesticks. Now, the post-gap candlestick here is a good one. We have a red one with a green one inside it. Usually, this means an upward trend. So you watch the day following, and you see, no, actually it fell. But again, the resultant candlestick is bullish. Sorry, it's bullish because it's a hammer. Hammers are usually bullish. It represents a reversal of a falling trend. Now, because of this, you're going to want to watch and see that it actually does rise, and well, it doesn't really rise. But the next day we see a doji star. This is the doji star I was talking about, where the opening price and the closing price were the same, which represents indecision in the investors. When you see indecision, you can say basically we don't know which way the stock is going to go. It's a 50-50 split. If you toss a coin, you'll probably be as right as your analysis. However, if you see a doji star below an area gap, that usually means you've got around a 70% probability of the gap filling. So you've got about a 70% probability of the stock rising from 15.81 to 16.5, which isn't a lot of profit, but it's a safe bet. If this gap happens to go past 16.5, it's probably going to hit its area of resistance, which I imagine to be around 17. We can check that real quickly, but I would say this is a pretty good bet. Let's make sure it's not a risky bet. Let's type in AA at stockta.com. Indeed, we do have a level of resistance at 16 points. Oh, okay. So we have a level of resistance right in the middle of that gap. Here's what's interesting about that. Usually when you have the resistance in the middle of an area gap, the resistance doesn't matter. The thing that matters more is that the gap hasn't filled. And the gap is more likely to fill than to be stopped by a resistance inside a gap. So we can pretty much ignore this resistance and then look at the Fibonacci's and the stochastic indicators. The Fibonacci say it's bearish, so if it goes up, it will probably go down. We don't see much of that in this chart, except you might say this is such a situation. However, the stochastics say that this stock is it's very bullish, right? It's greatly undersold, which means it's more or less undervalued. That plus the gap plus the indecision would give us a pretty strong bullish indication. I would say this is probably the riskiest, though, of all of the 5 stocks I've recommended for next week. But this is still a pretty good one, and the price is pretty low, so it's a pretty cheap one. If you don't want to go with the previous 4, this is probably your best bet after those. So those are the 5 stock choices, stock picks for next week. Let me drag this over here. Here they are again. Twitter, Microsoft, FCX, Halliburton, and AA. Check those out. Try to make a bet. Tell me how they go. Leave a comment. Subscribe. All that stuff. Marketing, 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 blah, 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 blah. Have fun. Keep trading.